You're listening to the Reinvest Podcast, where each Tuesday we show business owners and entrepreneurs how to diversify into real estate by equipping you with the tools and tactics to build generational wealth. Your hosts, Garrett Gatton and Seth Ciminillo. Hey guys, great day here on the Reinvest Podcast, talking all things real estate investing. Excited to dive into a topic today that we have not covered on the show, which after 140 plus episodes is actually very difficult to do. But before we do that, anything new on your front? Any advice you got for us, Seth? Things that you're reading or learning?
My wells of wisdom have run dry. No, I'm just kidding. One thing that I've been feeling lately, and maybe it's just because it's starting to get cold again. I think you just gotta stay positive. But it's don't be weary of doing good, right? Mm-hmm. There's that verse in the Bible that talks about that. But I think it's just across your life, don't get weary of the grind. Don't get weary of doing the fundamentals. Don't get weary of doing the boring things day in, day out, because that's the true test of whether or not you will be successful or see success in whatever you're working on. So I just know I go through those phases where it's like, man, it just feels like we are in it. And, we always come out the other side and we're always like, wow, that was really profitable. And those changes that we made were really good in our business. And so I would just say keep at it, even when it's boring, even when it's mundane. That consistency is one of the key things you can do.
Yeah, your ability to sit in the mundanity of something is where you build that compounding momentum. So we have an awesome guest here today, co-founder and CEO of a fintech, really lending application. And we're going to talk about blockchain today. We're going to talk about
tokens, whatever those are.
Right. We're not talking Chuck E. Cheese. We're talking about real tokenization of loans, things that have been happening. Maybe you've heard these buzzwords, and we're going to really get into it today. So with us on the show is Kirill Bensonoff. How are you, man?
Good. Thanks for having me on.
So you were telling us off camera, you're from the Northeast?
That's right. Getting a little cooler up here as well.
Yeah.
Feel like we all have to kind of go through those couple weeks of preparation, but then we become just absolutely gritty and rigid. And
right now it's cold in the morning and then it's hot in the afternoon and you're like, man, I'm shedding layers, but soon it will just be freezing. So
you're outside of, is it Baltimore? Did I say that right?
Right outside of Boston.
Boston. Okay, very cool.
Boston.
That's right. So tell us, how did you get into the real estate space? What was your on-ramp and the genesis of maybe even before New Silver and your touch point to real estate?
Yeah, absolutely. Yeah. So I'm a technologist. So I was in a very different space before, built a couple companies in enterprise IT broadly. And I think about 2011 or 12, I started investing with a friend of mine who ran essentially a fix and flip fund, local operation in Connecticut. And he kind of introduced me to that world. And I've been a fan ever since. I mean, and I always thought, even prior to this, I always thought about, how could technology combine with real estate? I think that makes for a very powerful application. And that was really just my early foray into real estate. That's how I got started, and been here ever since.
What a time to be an investor in a fix and flip fund in 2011 and 12. I mean, there was a ton of inventory on the market, lots of people buying equity, even if they didn't know it at the time.
Right.
Yeah, was that a pretty successful venture for you and your partner?
Yeah, it was great. It was great. We made some money, and I most importantly, I learned a ton. I had zero knowledge when I went in, and I kind of just shadowed, the friend of mine, and we talked a lot, and I learned a ton. So yeah, I'd say, I didn't really realize it at the time, honestly. It's always hard to predict the markets. I obviously, we'd just gone through the financial crisis, and I knew things were still a little bit shaky, but I didn't know if this is a great time to enter or not. Just like we don't right now, right? It doesn't ever look like it's a good time at that moment, right?
I always tell people I left my crystal ball at home. And, so many people speak with such confidence out there about what's going to happen, what's going on. And, I think there are fundamentals you can observe, but yeah, it is very difficult to make those predictions. Hindsight's 2020, and there's a reason that is a saying. So after that, you got into the fix and flip. That was your touch point with real estate. You had a background in technology. Some of your companies were more, you said IT related. When did you take any action, or what was that first step for you to marry the two, real estate and technology?
Yeah, so it was just kind of a coincidence that a friend of mine, long time friend of mine, Alex, who's now my co-founder, was had some availability, and I was kind of winding down my previous commitments, and we started kind of just looking very broadly, whether real estate, other asset classes. Crypto was one thing that we started playing with. This was like 2018, and we ended up building. And our CTO, Alexia, was in there as well, and we just kind of were brainstorming different things. We ended up building a piece of software that helped value single family residential, and essentially like help value what it would be worth as is right now, which I think is much easier, and then what it would be worth with some value add construction done. It was just kind of a rough thing that we're kind of looking at other things as well at the same time, but we thought, hey, other things kind of went by the wayside, and we initially, New Silver was initially going to be a software company. It was, we were going to build the software that would be almost like I don't know, Rocket Mortgage style software, LOS, a lending operating system for other lenders with construction specifically, that would help them, their clients basically figure out like, hey, I've got this property, here's the address, here's the budget, what is it worth today? What's it worth later?
Mm-hmm.
And as we were kind of looking at sort of the space in general, we made the decision that software was not something we wanted to sell, and it's not something we wanted to do in the space. But we really like what we built. We were actually already testing it with a few people, and it seemed to be working pretty well, and people seem to like it, seem to cut down time and make things more efficient. And so we said, hey, well, we raised a little bit of money. What we'll try to originate. My partner was a lifelong commercial real estate mostly, but he knew enough on the single family residential side as well. And we sort of just kind of hit the ground running. 2019, we went live with the software that we built.
Wow.
We're doing a loan a month, a couple loans a month for a little bit of time, and then forward from there.
So, so you started New Silver as it is today in 2019, and started actually originating loans through your software in your company. So, I mean, where are you at today in that? I mean, what are you seeing today as far as like your loan volume? Are you guys still really active? Have you grown outside your areas? Where are you lending at?
Oh yeah, we've definitely grown a lot. I mean, we're in, I'd say, roughly 40 states.
Wow.
Primarily kind of up and down the eastern seaboard, roughly, but then we do a fair amount in Texas, a fair amount in Tennessee, some in California even. So we're pretty broad. I mean, we don't really care where we originate, frankly, as long as we could do it, legally with the licensing and all of that stuff. We're licensed in a few different states. Some states don't allow, or don't require a license. Some states do require. We decided not to get a license, so we don't work there. And so we look at data, right? Like we think, like I personally think, and I think my team is on the same page. Real estate is it's kind of like, no, it doesn't. I don't really pay much attention to the cycles, to like the micro cycles as much. My personal thought is, it's kind of the same, right? Like, what do most people want? People who are, coming of age, coming out of college, right? They want one thing. People who are starting a family, they want something different as it relates to real estate, right? Like, let's say someone's starting a family, now they're interested in buying a house, right? As a consumer, where do they want to be? They want to be in an area where there's, safety, good education, good health care, all of the basic things that like a young family would need, right? Then as kind of things mature, maybe some of those things change. But I still feel like the real estate centers in the US haven't changed all that much in the past couple decades, even with like COVID. Yeah, we heard, people did move all over the place, right? You had people working out of like random locations, but has it been that sustainable? I'm not so sure. I think people still gravitate to those I guess quote unquote older centers of influence.
Yeah, I would agree with you. I think that in light of the shifts economically and demographically in the last 5 years coming out of COVID, there are pockets of areas that have been disproportionately affected. But by and large, it seems like the country as a whole is still very bullish on real estate. And from an agent perspective, this is something that we pay attention to a lot is inventory. Inventory is very low relative to the buyers in the market. So for us in our little metro, in our little corner of Northwest Ohio, we've seen days on market get a little bit longer, but pricing is still holding strong and actually increasing for the majority of the price points. And so, people they're still buying, they're still spending, investors are still making money, and maybe the deal flows has gone down a little bit, but I think we had an inflated sense of how many deals were out there. And now that capital is a little more reasonably priced from an interest rate perspective, it's kind of more of a balanced market, more of a normal market of investors. Hey, one of the things I wanted to get into is, we're titling this Rethinking Liquidity, a new framework for investors. And correct me if I'm wrong, but one of the things that separates New Silver, aside from another, investor-friendly loan origination company, is your utilization of blockchain and this idea of tokenizing loans. Can you give us like a 30,000 foot view and then kind of bring us down into how that applies to New Silver?
Certainly. Yes, you're absolutely right. So blockchain, for those that don't know, and I mean, I'm sure most everybody has heard of Bitcoin and other crypto assets. But blockchain is basically a ledger, right? It's a programmable ledger. Tokens are either gas or currency on that ledger. They can be programmed to do many different things, right? So they could be programmed just to be money-like. They could be programmed to have smart contract capability, so execute when certain things occur, etc. And it's been, I mean, it's technology. I think Bitcoin was the first, I believe, crypto asset. And then now there's, I don't really keep track, but there's
Right.
probably thousands, yeah, tens of thousands.
Yeah.
Most of them are not really doing all that much, but a good number of blockchains have matured and had, new generation, new versions built on top of the existing blockchains. And so kind of, what New Silver has done is on our capital market side, we have an ability to basically, we've partnered with some companies for the tech. We haven't built the tech on there. We partnered with a company called Centrifuge, and then we partnered with a distributed crypto firm. And essentially, what we're able to do is for the capital markets, this is like our bank, if you want to call it that, or a warehouse line. We put up some capital ourselves, and then the other side puts up capital as well. And then when the loan is originated, we have like a whole. It's sort of like I think a securitization structure. It's a private securitization. That's how it's built. There's a trustee. So some things still obviously happen on paper and between digital and paper. And then once the loan is originated and checked into this indenture trust that we have, we're able to basically tokenize it, meaning using technology, turn the loan into a crypto asset, and then recoup the capital from the blockchain to essentially repay the loan, repay New Silver for originating the loan, so and then recycle the capital that way. Yeah.
So, how does that benefit the client? Or is it more something that benefits you to recapitalize New Silver faster?
Yeah, I think that the benefit to the client is that it's exactly that. It's a faster way of transacting, right? So instead of waiting for, I don't know, weeks to settle a loan, our process could be done within, you know, maybe not minutes, but hours, right? It could be done the same day. There's still some manual components. Like I said, there's a trust and there's some verification that has to happen, but it's a fairly quick process. So it's a matter of efficiency. I think that's the biggest benefit for the client, and that lowers our costs. And we try to pass on those costs to the clients.
So if someone brings you a loan for a product, let's just say they're going to do a fix and flip loan, since that's one of your main things. I mean, how fast can they get capitalized?
Yeah, so I think we close within, I don't know, 5 business days. We've done something that's even faster than that. I think on the front end for the client, right? For the client, we have different technologies. They don't really touch or see the blockchain at all, right? We transact
Right.
in US dollars, using wires and ACHs and all of the same stuff that everyone else uses. So for that, we've also built technology, proprietary technology that I mentioned early on in the show that helps our processing and underwriting teams quickly underwrite those loans, right? And it helps the client essentially get an instant offer. So if somebody goes to our website, newsilver.com, click approved, get approved online, they can put in their address, a couple of data points about themselves, and then they'll, within, I don't know, a couple of minutes, they'll have essentially a preliminary term sheet with all of the pricing transparent on there. And then, then we still have to do evaluation and a couple other things afterwards, but they see all of the terms, what they qualify for. I believe our metrics are around 90% of the time. The terms stay exactly the same at the end of that. The full underwriting process is what they've seen. So it's a pretty high hit rate, and transparency is the key thing there, the speed to execution. And then the capital market is really where the blockchain comes in. So that's something that's more on the back end. Like investors don't really, our borrowers don't really see that stuff.
But just to understand it, because I'm just curious about this, when you guys originate a loan with your own capital and from the other sources that you're doing that on the front end before you take it to the blockchain, when you take it to the blockchain, is that the equivalent of a traditional lender selling a loan on the secondary market?
Correct.
Okay. So who,
or I should say, sorry, it's probably closer to a traditional lender putting it on their own balance sheet, right? That's probably a closer analogy there.
so where are you getting new sources of capital from?
So we have the blockchain, the securitization that we've built, there's committed capital there in terms of debt, and then we put up the first loss, the equity capital.
So you guys have taken the loan operating system that you created in the very beginning of this, that you thought you were going to sell as a software, and now you're utilizing it as the framework to be your own lender, and you've kind of built your own system.
Correct. Yeah.
And
Yeah.
it's
And
expedient, it's responsive, investors are able to close quickly. How many loans do you guys think you'll do this year in 2025? What's your projection?
I think on a monthly ongoing basis, we're doing, I'd say, roughly anywhere from 10 to 20 million in origination volume right now. We've grown significantly. So I think we got only a couple of months left until the end of the year here. So I think we'll still be in that range. We're next year we're thinking we're going to be above the 20 million mark in
So
a month.
this is just more of a question for you personally. So I'm going to make the assumption that if you're generating 10 to 20 million in monthly loan origination, I'm assuming as a partner in the ownership, you're doing pretty well. Okay, so what are you doing for your investment strategy? Are you finding passive investors to get into real estate, or like what's your investment kind of preference that way?
Me personally,
Yeah.
I'm doing a lot of different things. I mean, I'm certainly have a lot of my personal net worth tied up in the business, right? So that's my huge real estate exposure right there, right? I mean, it is
Right.
pretty diversified and it's not direct real estate ownership, right? But it is obviously very correlated to the broader real estate market. So my personal net worth is in the business. And then outside of that, I mean, I dabble a little bit. I co-invest with a couple of friends, here and there. I think it's just that my time is a bit limited, so I'm
Right.
more like a passive investor. I'd say I don't do projects myself, but I'm happy to passively co-invest in opportunities, whether it's locally or anywhere else. So that, yeah, I look at it
Mm-hmm.
that way.
Yeah.
So I'm just for all of our listeners who are listening who use some fix and flip products or companies and use DSCR companies, because those have gotten really popular, it seems like, too, in the last 5 years. I guess what makes New Silver better? Is it just the speed, or what? I mean, have you seen any differences that have been reoccurring as you've been helping investors?
Yeah, absolutely. So I mean, I think, listen, debt is a commodity, right? So what we do, many other people do, right? There's many other lenders, as you guys will know. Um, what I think differentiates us is a few different things. It is the convenience, right? So we kind of think like, convenience is sort of our North Star. Like, what are we trying to build? We're not a tech company, right? Though we have tech, but we're not a tech company. We're a lender. So what is it that's most important for our clients? It is the convenience broadly, right?
Yeah.
And what does that mean? Right? That could mean, this self-service, the fast self-service that we've built, right? That, a lot of people love. People, if you look at our Trustpilot profiles, for example, a lot of the feedback is around like, hey, how quickly was I able to get my term sheet? How convenient was I able to, put the second loan in after I come back to you guys? But, that's only one of the things, you know, customer service, great customer relations. I
Mm-hmm.
mean, that is obviously super, super important. Technology does not replace that, right? We still have a bunch of humans, a bunch of great humans sitting there
Right.
talking to clients all day long, right? So we still answer everybody's question, right? So I think that is part of convenience as well, right? So if somebody asks us, we want to get back to people right away. We are probably more tech enabled, right? But again, at the end of the day, we still have a bunch of great people that work there and help all of our clients get their stuff done. And then lastly, we think we're price competitive. I'm not going to sit here and say we're the cheapest, but I do believe that we're very price competitive, right?
Right.
And so, I think some of this technology enablement we hope translates into the price for our clients, right? So, obviously we our company is bootstrapped. We only raised debt capital, right, for the origination side of things, but we haven't raised, VC money or anything like that. So we need to be sustainable and profitable and pay everybody and make everyone happy at the end of each
Mm-hmm.
month. But we think that with technology we're able to do that and be price competitive.
So I'm just looking at some of the hard money products. Are the no income verification, is that just for a DSCR loan, or is those for fix and flips as well?
For all of our products, we do not verify income. It's I guess a no doc or a low doc would be sort of the best description.
Mm-hmm. Yeah, that's awesome. One of the things that's beneficial for an investor, and we're watching an investor of ours do this now, he finds a lender, he gets a system, and he rinses and repeats. And really, it's the efficiency and the expediency of moving on deals and then having almost like a trusted lending partner. They know you, you know them, you know their processes. You've got all the stuff that you need. You keep it in a file. You don't have to, the mental drag, the time drag. You can move with confidence when someone's like, hey, are you buying this or not? So, that's, I think, a benefit of having a very replicated process with investors. I could see that being a big
Absolutely.
thing. Yeah.
Absolutely. And technology assists partially with that. As I mentioned, for example, if someone comes in for the first time, there may be, a few things that they have to fill out or a few docs they have to upload. When they come back the next time, they just log in, right? Everything's already there. They have put in a new address. The system already knows who they are, so it's a much faster process for them. And also on the document collection side, for example, we chatted a little bit about before the show about this. Some of the newer technologies like AI can help us out, our processing team out, as well as the client. This is a new product that we're rolling out in the next couple of weeks. For example, when a client uploads a doc, this new technology, this AI-driven technology, can check the document and make sure it's the correct document. I don't know, maybe it's a certificate of good standing, or maybe it's an operating agreement, maybe it's driver's license, whatever, right? It could look at whether it's an image or a text document, verify that this goes with the loan that they're applying for, that all the information is correct, it's signed in the right place. And if it's not, it's going to tell them right then and there, this is not correct, whether we have to review it manually, which we'll obviously still do, or maybe they uploaded the wrong doc or forgot to sign it somewhere, they can upload it again.
Right. This, and I know we'll go into our smaller pocket segment after this, but I just want to make one comment on AI. What you just described is the application behind when people say AI is taking a portion of jobs. It's allowing a lot of the administrative work that every company has, no matter what industry you're in. Could be an HVAC company, processing and issuing invoices, all this stuff. It's cutting out a lot of the administrative hands that have to go on the business operation side of things. Mm-hmm. And I heard somebody say the other day that don't hire leverage technology. People are figuring out, how do I, instead of hire another employee, how do I go find a technology or an AI application that will help me leverage? And essentially, a lot of this tech in the AI implementation is hiring an employee, but for less money than a body, which is like a little, there's mixed opinions on what that is.
You said that a little weird. Yeah. less expensive than a body.
It's all zeros and ones, baby.
Yeah. I mean, I think that, there's a lot of talk about this in the broader markets, right, outside of real estate. And people are rightfully concerned, like young people are concerned coming out of school or whatever, right? Like they're concerned, am I going to have a job? And a lot of people are saying, hey, get into a field that can't be replaced by AI. So that's certainly not a bad strategy, right? But some people who are in law school, for example, right now, right? Like it's too late for them to switch gears possibly, right? And like, I think, but I think at the end of the day, it's sort of like, it's sort of like when the internet stuff was happening, right? Like in the late 90s, early 2000s. I was fairly young then, but I was kind of like paying some attention, right? And I think there's a lot of talk of like, hey, internet is just gonna kill all of our jobs, right? Like there's not gonna be any jobs left. But what happened today and even before today, right? We see that internet's enabled all of these other jobs to appear and all of these other things to prosper. Right. So I think AI is going to make our country better. Like I think, there's going to be a shift. Like some jobs will go away for sure, but there will be new ones that open up and new opportunities that open up.
Well, and I think one of the lessons that people need to come away with is not like, AI is bad because it's going to take our jobs, but hopefully encouraging people to, take a look at themselves and be like, what skills do I need to learn to still be valuable? And maybe part of that's learning how to use AI well and all that stuff. But I mean, really, we need to be valuable in the workforce to be getting paid anything. So, I mean, if you're not as valuable as you just getting replaced by AI, think about what skills you can upscale yourself with.
Somebody out there was like, oh my gosh.
Yeah, they're like, all I did was Google search stuff. Well, your job's probably over. Okay, we're going to take a transition here into our smaller pocket segment. So, Kirill, give us your worst deal in real estate. Mm-hmm. So it could be a deal that you were involved in personally, could be a deal that your company handled. What went wrong? And then most importantly, what did you learn from it?
Yeah, I could talk, again, I think I could talk about the stuff that I've kind of seen broadly from the perspective of a lender. And I may not have all of the details, but broadly, I don't think real estate is rocket science, right? But what we've seen is, people just kind of getting lost. And this has happened more than once, right? Like people who get into a project, we underwrite the project. The project is a good project, right? Like the few that we've had that fell into this boat kind of are decent projects in good areas that are worth something where they to be completed. But what we've seen people do is basically get lost and then spend, 10 months of their time trying to figure out what to do next. I don't know how, for the lack of a better word, right? They're just maybe they're lacking the experience, right? Or maybe they were lacking that advisor that they should have had. If they didn't have enough experience, they probably should have had somebody, helping them out, right? So that's what I've seen time and time again, is like just waiting for something to happen. And nothing is obviously going to happen unless you make it happen. So that's kind of what I've seen many times over.
We actually were helping a client that went through that exact thing where they were from out of the area and bought a 3-house package here to do fix and flip, and they did hard money. And it just, the first of the 3 houses, it took them almost 10 months to complete because they just got lost. They didn't know what they were doing. They didn't have the right contacts. Before they knew it, their loan was going to be due in 2 more months, and they had 2 houses left, and it was, painful lesson for them and us as their agents. but that's exactly right. Yeah, that inactivity will hurt you more than maybe your deal turning out to be bad. You know what I mean?
On the flip side, we were on a podcast episode with a guest not too long ago, and he bought his first flip property, and he put all of his own sweat equity into it, and he pushed that thing across the finish line. It was grueling. He'd never do it again that way, but he was willing to move the chains forward, even though it required his own involvement. So
a little different though when you have hard money on a loan and it's like 13%.
Yeah.
But what I would encourage people to do though is, like, even with a lender in place, and obviously there's a cost every month. But I don't think it's not a great strategy to wait for something to happen, right? You could talk to your lender, right? Let them know this is the situation. Ask for their advice. Maybe find a local advisor or somebody that knows, has done this before, and they can help you out with what the next step should be. I mean, lenders are typically pretty experienced, right? And it's, just speaking as a lender, like, it's in both the borrower and the lender's best interest to get the project done, right? So I think everyone in the industry that I know of is pretty helpful and is willing to listen and talk to folks and help out where they can to get to that mutual goal. But I think just sitting around and waiting for something to fall out of the sky is not a strategy.
Right, because you definitely don't want to take back the property.
Right. No lender wants to. As far as I know, we don't
Kirill
want to.
wants to travel from Connecticut. That's funny. All right. Hey, you've given us a lot of good stuff. We're going to go into our golden nugget. So, Kirill, been a lot of wisdom, a lot of really good advice on the show so far from your experience and the lending side of things. But we're going to change gears a little bit. Give us a piece of advice for our investors, something maybe fundamental to the way that you operate yourself. Like, everybody has like a driving principle of like, this is how I operate. What is that?
Good question. I think in general, I try to have personally just integrity, right? That's kind of a word that I'm thinking of, and have like a deep personal network of connections, right? And integrity, I believe, helps. I think, your network gets built out over time. People know and see, who's an A player, who's there for the long term, who's just there for this particular transaction, right? So that's kind of how I think of things. I think a deep personal network is irreplaceable. Like, AI is never going to replace that, right? Like, I or at least I hope not. I mean, I think having that network is super helpful.
Yeah. There are no shortcuts to building good relationships with people. And
Absolutely.
To your point, I experienced this. I think everybody does when they get into maybe it's a new workspace, a new industry, around a group of your sphere of influence. You come across one way at first, and anybody who's been doing it long enough they'll say, "We'll see. We'll see if you keep this up. We'll see if this is really who you are." Anybody can portray themselves a certain way, but it's not until you get squeezed that you see what comes out. So now, just speaking for myself, I've been in this for 6 years now. I feel like I've finally proven myself, not in like like I've been trying to prove myself, but just that consistency of showing up and going the extra mile for people, that it's that proverbial opportunity now is starting to kind of come a little easier. but it's tough when you're starting out. You're like, man, is anybody really seeing the integrity I operate with? Because I'm looking at this guy over here, and he's going a lot faster, and he's taking shortcuts. So that's good encouragement. I really like that. Okay, hey, in closing here, what's been one of the best resources in your business development?
Great question as well. If we're thinking about just kind of, I've been using ChatGPT a lot, for example, or other, LLMs. I mean, I think that there's like just, I don't know, an unending amount of information. There's so much information out there to begin with, right? Like there's just a lot between all the content and just all the different sources of info. But I think AI, ChatGPT specifically helps me hone it down to something that's a little bit more manageable. That's a great resource. I think finding the right use cases and writing out the right questions, the right prompts is super beneficial, and it saves a ton of time.
Yeah, there have been some really clear uses that I've done with ChatGPT and things that I did manually, creative work, organizing thoughts and distilling stuff. And literally, I'll put it in ChatGPT and I'll say, oh my gosh, that just saved me an hour and a half of time. Like, I clearly know that the alternative is I would have sat here for an hour and a half. And that's wild to me. That's wild. Exactly. What you didn't tell us is that when you started this whole thing, you went on ChatGPT and you said how to start a loan operating system based on blockchain. And that's new silver today. So no, I'm just kidding.
I wish we had ChatGPT when I started. We didn't have it yet.
You'd be a lot farther along.
Yeah.
Hey, in closing, thank you so much for coming on. What does it look like for somebody to connect with New Silver? What's the best place to go? Somebody who's an investor, curious about your loan products, or just wanting to connect with you?
Yeah, I think LinkedIn is if somebody wants to connect with me personally, LinkedIn, I always try to reply to messages if someone wants to shoot me a note there. Or our website, newsilver.com. I mean, if you're interested in our products, you can check them out there.
Awesome. Well, we will put those show notes, those links in our show notes. And excited to press a little in further. And hopefully somebody from our network here will try New Silver, and we'll get to see how it goes. Thank you so much for coming on today, Kirill.
Awesome. Thanks for having me, guys.
As always, excited that you joined us for another episode of the Reinvest Podcast. If you want to learn how you can use your hard-earned capital to diversify into real estate, go to our website, reinvestcapital.us, and shoot us a message. Move farther, reach higher, and grow deeper.